Hi, my name is Ernesto and I'm a Forex algo trader with years of live trading experience and positive results using Statistical Edge and EAs. I'm one of the best retail algo traders in the world with a solid tracking record you can verify, and today I want to share my knowledge and connect with more traders so we can grow together. Great, so we have the main event or trigger for the market volatility that will be tomorrow. This is CPI, the inflation of USA. So I was checking the JP Morgan outlook for tomorrow, and let's check first the information we have, like the daily. You need to check the FX calendar like daily, at least weekly. Check the whole week. I only have to manage the red folders for my trading system, but in general check as much as you want, use the filters. And I recommend Forex Factory. Across the time I've been comparing, and this is the one that usually gives the more accurate information and doesn't miss any event. So the previous and the forecast, we have that a previous was 0.4% and the forecast is 0.3%. Okay, so let's check the JP Morgan outlook. They are giving 37.5% chances that the CPI rises between 0.2% and 0.3%. They say an inline print should bring relief to investors and likely pulls money back into the market, as this removes the last major hurdle into what is likely to be a strong earnings period. The trader said this means, well, the S&P 500 will rise 0.5% or 1% under this outcome. If we check real quick the major pairs or indexes, we have Xauusd 0.40% for today, GDX 1.73%. They are recovering very good territory, needed actually. So you can see the bonds also positive, the XY as expected, and every coin against USD is appreciating. So dollar is taking hits, as we already know since at least 2023, even though we had that possible recovery or in signals of recovery. We can see that, well, there's nothing yet in the horizon that that tell us that the recovery is soon. So tomorrow this will be very expected, for at least for the forecast of Q4. So let's check. 35% chances is the second one, will be that CPI gains between 0.3% and 0.4%. That it's what we have in the forecast for more or less the forecast of the Forex Factory. This, remembers, it's not per se Forex Factory, it's a combination of all the data and important or major analysts. So that's a very reliable number or forecast, but it's not always the one that it's or the actual. So the 35% chances are going with the one that we have in Forex Factory. So that, keep in mind that the second option is the one per JP Morgan. So don't worry, they get things always wrong. Like, they will just say something and everyone will read it. So they know that it doesn't matter if they are good or bad or good or wrong. I mean, they will make money anyways. They have too much money and pressure in the markets to even care about these things. So the idea is that they have the 35% chance that the CPI gains between 0.3%, because this outcome could trigger several market moves. The trader said a 0.3% increase will be digested well by market, while a 0.4% advance could spark fears on another inflation surge, while repricing bond yields higher as cut expectation dissipate. S&P 500 moves range from a 0.25% gain to a 1% loss here per JP Morgan traders. And let's go with the 15% chance. The CPI climbs just 0.01%, 0.2%. The S&P 500 will rally 1.25% to almost almost 2%. And under this scenario, as it could push yields of the multi-month highs reached in recent weeks, that's very good. This will be supportive of equities, especially cyclical value, as part of an everything rally. So then the 10% chance the CPI surges more than 0.4%, that will be catastrophic. S&P 500 would drop between 1.75% and 2.5%. Under this scenario, raising concerns over whether any Fed rate cuts will take place this year. So that's very, very bad. And the lowest scenario will be that the inflation comes flat. This is the other tail risk scenario where bond yields will see significant decline with the 10-year yield falling 20 bps or more, as investors potentially carry that momentum to push the 10-year below 4%. That's important also. In the succeeding days, the S&P 500 will surge between 1.5% and 2%. So let's go with the first two outcomes that are so far the easiest one to trade. And let's go back to the charts. We can see the expectations are, or the idea is for inflation to lower, because Fed is it's a very pride, we could say, institution. So they don't like to do things wrong or be wrong or on the wrong side of the story. So they will push or do anything. They will take any measure to control the inflation, because markets need the rates to go down at one point, because even for manufacturing or different sectors in the economy, this price of gold is very, very, very dangerous. Like, it's when metal rises, like for example, well, any metal used in the construction environment, like when it goes up, like aluminum, when it goes up, like people suffer, like the daily suffers. It's not only the big companies, it's a general hit in the economy because everything costs more. So let's remember, gold is we don't see it, but it's in every part of, or in a lot of circuits and a lot of chips. We have a lot of elements in our dailies that use gold in a small portion, but we need it. And market also is reflecting a really mixed data between what is Xauusd and what miners of gold are doing. Like, miners are underperforming since, I don't know if 2022, but at least since 2023, while gold keeps pushing high and higher and higher. So something, it's not very balanced in this, in the case that someone is pushing the price, and the price of Xauusd, like someone is pushing price of gold against the USD. This is not only geopolitical tensions or money printing. There's a lot of factors we need to consider, and the main point is, if USA starts showing recovery and the Fed starts giving investors some hopes, and they start showing some good data and positive data for a recovery in at least at the end of the year in the Q4, well, investors will start taking dollar again. They don't care about geopolitical wars or anything. Like, they go or move against what they think is the best move. Well, they move with what they think is the best move, and of course, going against dollar not every time is smart, because they will recover at one point. A lot of people also owe money to the USA, so their debt it's not the biggest trigger. There's also another type of triggers, like geopolitical issues or another pandemic that we cannot control. But in general, investors know USD won't, well, the dollar won't stay this weak for forever, because USA will say it's going, like, it's just clear, and a lot of countries like the dollar need a strong dollar, so they will push, or there's a lot of scenarios where USA doesn't lose. So let's keep that in mind, and I'm gonna in the next video share the technical part of the analysis and the breakdown of Xauusd for tomorrow, based in the, not in the scenarios of JP Morgan, but let's follow at least the first three that give very solid numbers: 0.1 to 0.2, 0.3 to 0.4, and 0.2 to 0.3. Those three are the best outcomes we can get. So stay tuned, please subscribe if you want to continue with these thoughts, and that will be it for today.